Hey there and welcome to Real Investment News. I'm Mike O'Neill. What a day. The markets took a tumble. The Dow was down 665 points. The S&P was down almost 60. Nasdaq 144.99 for the Dow. This is actually the biggest drop that we have seen in about a year and a half. And when you take a look at the heat map, you can see that the losses were pretty much across the board with a few exceptions, like Amazon, of course, it was up almost 3%. So was Charter Communications, actually up 4.3%. ExxonMobil was down 5%, and Google actually lost 5.25%. Now, as you can imagine, all of this movement caused a big spike in volatility. Right now, it is at 17.16. Now, this is often called the fear gauge. Actually, let me pull up the movement here so you can see it. Now, we haven't seen drops like this in the market for years, so you can understand why this actually spiked right here later this afternoon. And as a matter of fact, we haven't seen a spike like this since right before President Trump's election, when investors were wondering what would happen. But people are actually looking at the numbers, not so much the percentage, because the Dow is only down about 2.5%. The S&P is only down about 2%, Nasdaq about 2%. But as a percentage, this is nothing. I repeat, this is nothing. Doesn't even qualify as a correction. That's when things drop about 10%. That's a correction. A bear market doesn't even start until we're down 20%. So this is not a time to panic. It's a time to watch, but it's not a time to panic. And as I promised earlier, we were going to take a closer look at wages. Along with today's labor report, we saw these headlines. Wages grow at the fastest rate. Wages up the most in 8 years. So here are the numbers. Now, year over year, yeah, there was a 2.9% jump in the average hourly wages. That is the most since June of 2009. Now, that is fantastic. But why did they jump? Well, that's because the number of hours that we are working every week actually dropped to 34.3. That's a 2.9% drop from last year. So the average weekly earnings only increased 2.6% year over year, and that is actually down over the past 2 months. And when you break it down by hours, the real hourly average wage actually climbed only by about 1%. As a matter of fact, a little bit less. Okay, but someone got a pay raise, right? Yeah, but who? Well, supervisors and managers. Those making the top 20% saw the biggest jumps year over year. Those in the bottom 80%, well, they were flat. As a matter of fact, they were a little bit down. In fact, when you look at the trend since 2008, this may be no surprise, those in the top 20% have been getting more, the bottom 80% less. You know what? You're not going to see this kind of analysis everywhere. So you remember to follow us on Facebook, Twitter, YouTube. Check out our past reports on realinvestmentnews.com. I'm Mike O'Neill. Thank you so very much for watching. We will see you on Monday morning.